What is PIP in forex trading? PIP is price index point or price interest point. But what exactly does it mean? Most of the currency pairs exchange rate is represented in a 4 decimal points. That means after the decimal there will be like 4 digits. We can say that the change in 1 point in the 4th decimal point can be said as 1 pip. For example, take the currency pair Euro US dollar. The exchange rate is 1.4530. Because of the currency fluctuations, let's say the exchange rate changed to 1.4531. Here, the last digit is changed from 0 to 1. That means the difference is 0.0001. The change in the 4th decimal point is 1. This is called 1 pip for these currency pairs. That means for the currency pairs which have 4 digits after the decimal point. Some currency pairs will have only 2 digits after the decimal point. For these currency pairs, 1 point change in the 2nd digit after the decimal point is called 1 pip. For example, take the currency pair US dollar Japan yen. Let's say the exchange rate is 90.27. Because of the currency fluctuations, let's say the exchange rate changed to 90.28. Here the difference is 0.01. That means the last digit, the 2nd digit after the decimal point is changed from 7 to 8. So the difference is 0.01. The change in the 2nd digit is 1 point, which is 1 pip for these currency pairs. How to calculate the pips more easily? If the currency pair has 4 digits after the decimal point, multiply it with 10,000, then get the difference, which is nothing but the pips. Let's say Euro US dollar exchange rate is 1.4534. Multiply it by 10,000 and it becomes 14,534. Let's say because of the currency fluctuations, the exchange rate changed to 1.4634. Multiply it by 10,000 and it becomes 14,634. The difference is 100, which is nothing but 100 pips. So we can say that the Euro US dollar currency pair has increased in 100 pips. Let's say the GBP US dollar exchange rate is 1.7691. Multiply it by 10,000 and it becomes 17,691. Let's say because of the currency fluctuations, the exchange rate changed to 1.7531. Multiply it by 10,000 and it becomes 17,591. The difference is minus 100, which is nothing but 100 pips. So we can say that the currency pair has decreased in 100 pips. The currency pairs like US dollar Japan yen, Canadian dollar Japan yen, etc. have only 2 digits after the decimal point. For these currency pairs, use 100 to multiply and take the difference and you will get the number of pips. Value of each pip. What exactly is the value of each pip? This differs for each currency pair. Generally, the value of each pip depends on the following: lot size, number of lots, and pip size. Pip value is equal to lot size into number of lots into pip size. Example, Euro US dollar. Let's calculate the pip value of Euro US dollar for one standard lot with a leverage of 1:100. Pip value is equal to 100,000, which is the lot size for 1:100 leverage, into 1, which is the number of lots, into 0.0001, which is the pip size. That equals to $10. So for one standard lot with a leverage of 1:100, if you get 1 pip profit, means you get a profit of $10. Let's calculate the pip value of Euro US dollar for one standard lot with a leverage of 1:400. For 1:400 leverage, the lot size will be 400,000. So the pip value equals to 400,000, which is the lot size for 1:400 leverage, into 1, the number of lots, into 0.0001, which is the pip size, that equals to $40. So with more leverage, the pip value increases. That's why it's more profitable, but at the same time it is risky also. Euro GBP. Let's calculate the for another pair, which is Euro GBP for one standard lot with a leverage of 1:100. Pip value equals to 100,000, which is the lot size for 1:100 leverage into 1 number of lots into 0.0001 pip size, that equals to 10 British pounds. But this has to be converted into dollars. Let's say the current exchange rate is 1.5430. So this will be 10 into 1.5430, which is $15.34. So for this currency pair, each pip will be $15.34.